Good afternoon, everybody. Phil Simons with Columbia Grain here in your Friday afternoon weekly grain market recap. Well, we got another full week of trading in the books, so let's go ahead and dive right into it. I'm going to share my screen with you again. We're going to navigate over to our favorite website, columbiagrain.com. And in the upper right-hand corner, we're going to go to the Producer Solutions tab, which will take us over to our Producer Solutions link, where we house all of our pertinent data that could be potentially driving the markets, along with our cash bids at all of our various locations. So be sure to definitely take a look at that aspect of the Producer Solutions website. But again, today, overall this week, we actually wound the week up on a positive note week on week, although we did give up a little bit of ground here today. And primarily, I do believe that the overall weakness in across the commodity spectrum really was coming from the Stats Canada that they actually did release their equivalent of what could be the USDA quarterly grain stocks this morning, providing a little bit more clarity in terms of the overall what they have in terms of ending stocks in Canada. And right now, they actually came up with the end of December. Their quarterly stocks are coming in at just under 24.5 million metric tons. But in all reality, it was quite sharply above the overall market expectations, which were coming in at just over 23 million metric tons. So again, we did see a little bit of a revision there in terms of what the overall ending stocks could potentially be in Stats Canada. But in all reality, when you look at see how they got to these kind of numbers, we actually did see that they revised the December 31st stocks from last in 2023 up by about 3 million metric tons from their previous numbers. So that's definitely, one of the reasons that you saw such a significant change, in the potential ending stocks there is really because they did change the December 31st of 2023, the overall the numbers from that starting point there up to 24 million metric tons. But again, that's why we were seeing a little bit of the markets kind of falling down here today, in my opinion, in terms of why we saw the markets close down slightly here today. But overall here, when we look at what we saw in the week, we did have the export sales report out yesterday in the U.S. Soybeans and corn. Corn actually continues to come in at a fairly good clip from last week's sales coming in at just over 58 million bushels. So definitely nice to continue to see the demand and the business actually getting done out of the U.S. for corn. Soybeans, on the other hand, were a little bit disappointing, coming in at just over 14 million bushels there. So continuing to get a little bit less competitive, as the big buyers continue to turn and look to other origins for their purchase needs. But when you look at the all wheat class as well, coming in actually fairly decent, just over 16 million bushels, and then you can see the by class wheat breakdown, with spring wheat coming in at just over 2.3 million bushels sold last week. Hard red winter wheat came in at 6.4 million bushels, and soft red coming in at 4.5 million. And then soft white wheat coming in just under 3 million bushels over there on soft white wheat. So definitely nice to continue to see the pace for export sales for corn and wheat continuing to impress across the board there. When you look and see again how the futures action was this week, we really did end the week with a net positive gain, although we did give a little bit of it back here today. But when we look specifically at new crop, so if we're looking at December 25 corn on the left-hand side of your screen, you can see that the weekly range was 15 cents. We're actually able to hold on to a 9-cent gain week on week here. And when we look at new crop beans, looking at Nov 25 beans, the overall weekly range was 33 cents and a net gain. We're actually able to hold on to 13 cents there. But then you turn the page and you look at the wheat complex. Kansas CEP 25 had a weekly range of 39 cents. And we were actually able to hold on to a net gain of 30 cents in that market. When you look at Chicago CEP 25, we actually had an overall range of 38 cents and able to hold on to 25 cents of that overall range this week. And winding things up over Minneapolis, you had a weekly range of 30 cents and able to hold on to 21 cents over there. And again, these are all new crop values, new crop futures prices. So definitely nice to see a little bit of a spark, primarily in the wheat market here. But again, this could really be contributed to, more of a short covering I don't want to call it a squeeze, but definitely a short covering rally, as the funds or the speculative crowd have been holding a relatively large short futures position in the wheat complex is in its entirety. We are starting to see them kind of unwind that to a little bit of a degree, and buying some of those futures back in, which is giving us a little bit of a rally. But more than anything, it's giving us a lot of pricing opportunities right now when we are looking out to new crop wheats, corn, soybeans, whatever it may be. We are seeing some definite pricing points that look good when we look to see, where do we want to look at having some of those hedge to arrive contract orders out there, our basis orders, our cash orders, whatever it may be. Definitely be sure to get your orders out there and get them working with your local managers and your local buyers, because we do need to be able to take advantage of these types of price, these knee-jerk reactions that we're continuing to see and the volatility that we're seeing in the markets as well. But other than that, we're going to go ahead and wrap everything up for the week here. I hope everybody has a great weekend. And remember, treat every day like it's Mother's Day. Have a great weekend, everybody. We'll talk with you next week.